Morning, traders. Welcome to the Traders Lab. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community chat? Okay, good. I appreciate a response. I don't know if I'm streaming or if you guys have audio, so just jump on there and just give me a yes, a no, or you don't know. But if I don't see anything, I'm assuming you're not hearing me. Just so you know. Thanks, Bernstein. Okay, thanks, Steven, sorry. Good morning, everybody. Welcome to the Trader Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. And this stream is based on structured trades that are available to all of you at no cost in the Bookmap Discord Trader Lab server, as well as a library of webinars on this process and many different configurations of market behavior that if you vet, you may be able to build out a trade plan to, at times, get in alignment with the market and potentially build out the business side of trading. The business of trading, in my opinion, is a statistically based business. It is very much like gaming. The model that trading, in my opinion, is based on is acting like a casino in the sense of gamblers and the casinos meet. In that exchange, in a random environment, gamblers walk out with dollars and the casino also gets dollars. The casinos tend to extract the dollars from the gamblers because they only play games that have a statistical edge, whereas the gamblers are all doing their own thing and tweaking, tuning, guessing, and whatever. Now, the environment is random, but how can the casinos consistently extract dollars on a random basis from those gamblers? That is because they play something called games, and in our world it's setups or structured trades that have a statistical edge. So over time, because they have a vetted business plan, they know even though the outcome of any individual interaction with the gamblers, or in our case, the other market participants, is random, that with an anchored input in a structured game or trade, and if they play the games in a disciplined fashion, the same exact way, even though the outcome is random, over a large sample size, they extract dollars from the gamblers. And the proof is, go visit Las Vegas or any casino. So if we know that business model works, then maybe it makes sense that we emulate a successful business process. And while it's no guarantee our business will be successful, it is something that we can build off of because we're not reinventing the wheel. We're using a track that we might be able to run in a very similar aligned environment. And I hope that makes sense. And this is the basis of the Trader Lab, understanding the business of trading using structured trades to develop a vetted trading plan, and then also dealing with the emotional obstacles to actually implement a plan in a random environment, which is extremely counterintuitive to our basic instinctual wiring, which is run from the saber-toothed tiger and no, I don't want to lose, and fear, moving the stop, bailing out, skipping the trades. The casinos don't do any of that. They don't change the game when a gambler wins. They don't skip the next hand. If you're playing blackjack, they don't change it from 7 to 10 cards because they don't like the way the last couple of hands have played out. All the things we do, they don't do. Maybe it makes sense not to do what most retail traders do. Maybe it makes sense to do what the casinos do. And that is anchored trades, structured games, etc. I hope that makes sense. That's what the Trader Lab is built on, and it's to help traders develop an understanding of the business side of trading and potentially create career paths for themselves. And while everybody is different and not everyone will succeed, obviously, in my opinion, you can learn to trade. You just have to be willing to find your niche, your groove, what aligns with you psychologically, and develop it. And it's going to take time. There's no shortcut. You can't imitate any other trader because every trader finds what aligns psychologically. And this is part of the search. You can learn to trade, but you have to find where it fits. And this is what the Trader Lab is about. And you're all invited to Trader Lab. You can participate in a great community of traders that have come together with all different approaches, all different experiences, all different time in the market and with trading experience, and leverage that experience and adopt what works for you. And again, thanks for visiting Trader Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, and it is built on structured trades that are available to all of you if you click the link in the bottom of YouTube. And it can take you over to Trader Lab. And of course, there's no cost for all the resources that are available on the Bookmap server. A lot of additional education at no cost, plus all the resources in the Trader Lab. In fact, I'm going to be going over structured trades. I want to show you what they look like, just so you know what I'm talking about, and then I'll move right on. This is what the structured trades look like. There's 60 PDFs of these. They are available to all of you at no cost, and this is what you're going to see in today's stream. I did these 4 years ago, and I'm not a vendor. There's no specific trading course, a lot of market phenomena, but the most important thing is you can download these, research. This is from 2020, and you can and these are real trades. So some of them are just screenshots. Bookmap asked me to do these and share, and other traders were asking me, what are you doing? So, now I've been doing this for 44 years. Professionally and now as a retail trader, so I'm just like you. I've just had more time to abuse myself and go down many, many dead ends, just like you. So we're all the same in that sense. The only problem I have is when I started, we didn't have an internet, we didn't have personal computers. So you might say it was a little bit more of a challenge for me. This is the ETH. And this shows us the auction. This is called auction market theory. So this is the volume profile. By the way, I'm getting a little data lag here. I'm not getting it on my trading computer, but I'm using a different Rhythmic server that is specifically for non-trading accounts. So in here, I don't trade from this. And it is set up a little differently so I can share these things with you without clutter. So these are called distributions, and basically how the auction works. It's not complicated. It is what's too high, what's too low. Think of it, this is your consolidations or rotations. Now I'm only showing you the volume. I'm not showing, it's not what's over here. It's what's here. Inside of a consolidation, and this happens in all fractals or time frames, there's high volume. When the volume tapers off, that means, let's assume that the high of anything, and this is the ETH high, if the price gets too high, don't we have, if you were shopping in the store and your can of tuna, and again, I always never know why it's tuna, but it seems interesting. If the price is $1.50 up here, but the retail price is $1 here, because that's where the retail is. Buyers and sellers do most volume at a fair price, right? You buy retail. But suppose you go to a store and it's $1.50. Well, somebody who needs tuna for the casserole may still buy that tuna, but there's less buyers. Now we come down here, most of the business is done here, but let's say they put it on sale. Now you perceive this, the dollar, is a fair price. They put it on 75 cents. They're having a flash sale at your favorite supermarket. For one, remember, it used to be Kmart shoppers. There was a store called Kmart, and they'd make an announcement, and everybody would charge over. For 5 minutes only, for the next half hour, you can buy tuna at 75 cents a can. Attention Kmart shoppers. Everybody run over there, but it's temporary. And then, so you get demand, but there's less volume done because the sellers raise the price. This is basically what creates. So you understand this. Now, here's the other piece to this. This rotation happens in all time frames or fractals. So it's important to understand how the market works. It is a discovery process. How do you set the price for something? Well, why do we even have a market? It's to kind of figure out what's going on. What's this thing worth? I don't know. Let's auction. So let's go to RTH Open. I'm going to start with structured trades. In fact, all I do in the Trader Lab is share structured trades. Yesterday's high. This is the ETH high. And these are all statistically based, and this is available to all of you at no cost in the Trader Lab. So statistics. Let's go a little further. Let me just see what overnight volume point of control. Now this one's important. I'm going to give you a couple statistics, and I'm going to speed along, hopefully as best I can. The overnight volume point of control. What is this? This is where the highest volume took place in the ETH. And what does high volume represent? Retail. So we can get too high, which was the ETH high or overnight high. We can get too low, which is the ETH low, and we can have retail, high volume. I like this price. So we rotate around it. That's kind of how this works. So there's retail. Now, statistically, in past performance, not indicative of future results, you got to vet anything you hear from anybody, anywhere, here or anyplace else. So just so you know, there's approximately an 82-ish% probability we're going to check this during the RTH. This is yesterday's highest volume price. Now, if you remember yesterday, and yesterday helps to set the tone for today, we gapped lower, we had buying, and we were on the long side all day yesterday. It didn't matter, long. Now, it doesn't mean you could do whatever your plan says. For me, I just kind of go with the flow. The trend is up. Get a gap lower. What does it mean? Did the trend stop? No. We've had breakaway gaps. We had a gap lower yesterday. Take the week longs out. Write this down. Market goes up to go down. Market goes down to go up. Why? Because there's fuel or stops on both sides of the market. And this happens in all time frames or all fractals. I don't think of the clock, but it's up to you. So overnight volume point of control. 82-ish%, that will get there. This is yesterday's RTH highest retail price. And that's about a 67-ish% to 70% probability we'll get there. You're going, oh, that's nice. How about the overnight mid? That's ETH mid. I got to find it. Roughly a 72 to 83%. Let me see if I got these right. Yeah, ish probability. There's a spread on these because we opened, our opening is, it's kind of, if you open above the previous close, it changes it. Well, to me, this is pretty much the same. So it doesn't matter. They're both high probabilities. So high probability to get there. So far, you're going, oh, really? That's a lot. Yeah, it is. Value area low. Now, some use this, some don't. For me, it's like a signpost. There used to be in the Belt Parkway in Brooklyn, going on the Verrazano Bridge, if any of you have ever driven there, it says last exit to Brooklyn. So last exit to Brooklyn. I grew up there, so I kind of relate to it that way. And then what else do we have? ETH low, outside higher time frame area. One other piece. Microcomposite low volume node. This is a target on the way up here. And all this is in Trader Lab before the party starts. And what's this? Now, this is a little confusing. What I'm doing, this is intermediate time frame, low volume node. What did I show you in the ETH? Low volume node. They happen on the bottom and they happen on the top. where the volume dries up. And the market has a tendency to trade into them and either rotate back up, or if the one's on top and we rotate up to it, we can rotate, whatever it'll do, it'll do. This is part of the joy of trading. Just like in the casinos, right? I don't know. Every hand's unique. Every moment in the market's unique. It's important to keep that in mind. Write that down. You are not responsible for knowing anything. And if you think your business is to predict, you're in the wrong business. Or I should say, you're in the right business, but you might be approaching it in a somewhat self-destructive manner. If mentally you think your job is to predict where the market's going, you're going to be continually frustrated, but also looking to solve that problem. The casinos have solved it by knowing they don't know the outcome of the next hand. Remember our business model. Maybe our energy should be focused not on predicting, but on operating in a random environment and only interacting when we have an edge. Think about it if you haven't thought about that, because I'm going to suggest you come to Trader Lab if you're trying to predict the next trade, because that might not be a viable process unless, of course, you're able to do it. And then please come to Trader Lab, because we all want to be able to predict also. So I haven't been able to do it, and I've been doing this going on over 44 years now, and I spent a number of years trying to do that because I thought that's what trading was. Nobody ever told me. Of course, I was in a vacuum. So this is the RTH open right here. Let's go look at the first trades. Now, there's a dilemma here. And what's interesting about trading is there's no right way. And what you're going to think about it is, what is the right thing to do? The right thing is based on a trade plan and the acceptance of a random outcome. Write that down. There's no right or wrong. I can be getting long. Other traders will be getting short. This happens in Trader Lab. They go, why are you getting long? I'm going to go, I don't know. It's my plan. That's the answer. Why aren't you getting short? Or why don't you wait for a specific location? Well, I can do both. But why can I do that? My time frame is can be short term. Whereas other traders will put a trade on, will wait, put a trade on, and then, take a nap. That's a joke. I hope you find that humorous. Why? Because we're all different. So many of us gravitate. I've never been in a trade calling room, but I know many traders. Now it's available with the internet, But, when I started, we didn't have an internet or even personal computers, so it's a little different. But you guys tend to want to see, how do you do this? And then you see somebody do it, you want to imitate it because it works, right? It might not work for you because nobody can replicate the psychology of another individual. And that's where that idea, I believe, breaks down. Notice I have a delay and it's strictly rhythmic demo data here. So I'm not on a trading server with Rhythmic. I just want to point that out because on my other Bookmap, the one I trade off of, everything is speeding right along. So, and by the way, if you have questions, please post them. Hold on one second. Things are a little locked up here. There's a delay in YouTube. And remember, these trades are available at no cost to everyone. In the Bookmap Discord server. Structured trades, now I'm going to be going over. Hold on one second. By the way, if you lose audio or something goes bump in the night, please let me know. Sometimes things happen. Okay, let's get going. Okay, so the probabilities. So here's the deal. We're opening here. Now, you can go long, you can go short. And I know you're rolling your eyes in your head. I would too. Why might I go long? This has a high probability of getting tagged. Full session VWAP is up here. I'm sorry, this is not correct. Forget it. It's current. Overnight high. So this is what I'm looking at. I'm looking at this, and I'm looking at this here and this here. Overnight volume point of control, 82%, overnight mid around 80%, whatever. So I know I can go here, I can go here. So I have a dilemma. So this is, and here's the other piece to this. Often, whatever the first directional move is, we will counter rotate over it. And I always say in the Trader Lab, the first trade, the opening trade, is an aggressive trade, and it's the last place you should trade. But you should narrate it and mentally trade it. If you are in a hurry to trade and you take all those structured trades I've shared on those 60 PDFs that are available, and that link in YouTube can give you access to those at no cost, that's FOMO. And unfortunately, you're taking yourself potentially out of the business. If you want to be in the business, discipline starts day one. If you don't have it, you probably won't succeed. And that's unfortunate, because I think everybody has a chance if they can master themselves. Opening trade, possibility to go here, possibility overnight high. Let me show you the trade. So I went long. Let me show you a couple of things. This at the RTH Open is called the developing volume point of control. This is the market pulse. I've been referencing the market pulse. You guys know I'm not a huge fan of any indicator unless you understand market mechanics. So you need to prioritize your inputs. My input yesterday, buyers came for the gap lower. Market is bullish. I want to get long. Where do I get long? That, my friends, is the question. It's either here or down here or lower. Don't know. So my first trade, since I kind of follow structured trades, is to go for the ETH high. So here's what I see. Let's come back. Market pulse. I have a buying pulse here showing me, this is called the volume pressure imbalance. It's an algo, but don't with the term algo. Very fancy term for math. You know, algorithm is math. So basically it's measuring the volume. So it's an overbought, oversold kind of a thing. But for me, I look at it, if the volume point of control is here, overnight volume point of control, retail price, and I get oversold on a rotation, I see my buyer, I see my sellers here, and I get my buyers above that seller with this, and this is the liquidity tracker difference. This is inverted, so when it drops down, and this is down here, just giving you a few pieces, it is saying long. Now, that's not the reason to get long. That is tertiary. The reason for me, the structured trade, RTH Open VPOC migration. This is my first trade. So it's a long. So I took this. And I post that into Trader Lab. Now, I don't call trades, right? So I go, I don't know. So I take the trade. And I get my scale. Now, here's the next piece. Let's follow. This is called VPOC migration. It is a structure. And what's important about it, if we have a directional move and there's more volume here than here, it is suggesting a new retail price. Remember at the top of the stream. Oh, retail. And now you can't buy it here. They raised the price. You want tuna? This is the price of tuna. So I'm going to label this. And I call it a variable high volume node. And a high volume node is another term, high volume for retail. Think shopping. This is what trading really is. It's a shopping experience. Not magical. It's just buying and selling, right? So this now is the next location. High volume node. Let's label that one too. So this is what I know. Remember, we don't know anything, but I think I know at the moment. Taking you very slowly through this, because once you get this, you'll understand what I'm doing for the rest of the stream. I have, by the way, this is another piece. Liquidity came into the book. The liquidity is here. This is how order flow helps you. This Now, these are algorithmic, most likely. Now, you don't know what anybody's doing here, really. I mean, what is the purpose of this liquidity here? Is it to buy, or is it to put pressure and push the market higher? What else do we know about this? This is the opening swing low. So if we go up, we can still come down and take this leg out. So you need to label this opening swing. Yep, low. So let's do that. And why do I suggest you do this? So you don't forget. Also, when you're developing the opening trade, which is its own specialty, it's its own little thing, you really need to be trading it in its own little world. It's its own specialty. So it's a special trade. It's aggressive, and I anticipate when I get long this to get taken out. But what's my play? To get to the ETH high before I take these guys out. So I'm just letting you know. And I got this. So watch this. And here's the first trade. So this is the first trade, and this is my target. So long scale, stop is under here, and now I start managing the trade. And trade management's another conversation, but we can discuss it. Here's the VWAP, here's the mid. Variable high volume node. Don't forget that. Why? Shopping. Is this too low? Is this too high? So here's what I did. I got long. I got scaled. I'm going for this. A little prayer. Breakdown. Got taken out on a trailing stop because I managed the trade. Remember, aggressive, opening swing low, stops. Comes back here. This is another location. It's getting a little more dangerous. This is still in the book. Another long. This is my obstacle. Scale, going for this. Taken out here. I'm going, what do I see? Sellers trapped. I take another long. I was posting this in Trader Lab, and you're probably thinking I'm out of my mind. And I'm going again for this and to take these sellers out. Scale. I'm going, all right, we're going to get them now. What happened, you ask? So what is this? Long to here, out. Long to here, out. Broker's sending me the gift basket. I'm looking forward to it. Maybe for Mother's Day. Sellers trapped here, long to here, back here, can't get above here, trade is over. Variable high volume node. That's the first sequence. That's what I did. I'm sure, and in Trader Lab, we probably had others that were just selling this here. Actually, this pick becomes a short here, but that's besides the point. Any questions on the first opening sequence? Hope you're getting something out of this. Are you guys tracking? Now remember, you're asking me about candlesticks, Eric. Well, I don't use any of that. It doesn't mean you can't, of course. Anything that is fixed in nature, like candles, wicks, candles, bodies, that's not really what's happening. I can put a candlestick on here and I'll see them, but I'm using this because this is the most immediate information. What does this tell me? Now, by the time I get a candlestick formed, which is a time-based, assuming you're using time and not range, it's all whatever, anything. It's all the same. Bookmap is giving me a different viewpoint. The buyers are here. Icebergs are selling up here. This is notable to me. Now, I don't know what it's, if I come down here and I get buying icebergs, icebergs, that's just a piece, right? I don't know. But I do know I got my buyers. Everything's looking lovely. There's my sellers. to VWAP. Now, in the Trader Lab, and I'm going to just mention this to you, we have a structured trade called VWAP to VPOC. Now, auction doesn't care about range. Auction is about behavior. So I know when I come here, I also know this is too low, you see. So I know when I come here, I can anticipate coming here. I can't execute, but let me mention this to you. If this was down, if the VWAP was here, that's a structured trade, assuming, the world doesn't fall apart, and then it would come back here. The fact that it's here is the same behavior. You can see it. It's called VWAP to VPOC. Doesn't qualify as, it's a structured trade that is not qualified, only because of range, not because of behavior. Auction could care less about what we need from a risk reward. I know this is too high because I got my sellers here. So these guys are trapped at the moment. For this to work, I have to clear these guys. Why did it stop there, you ask? It stopped because the buyers were absorbed by the passive side. We can't see them, except, what do we see here? Iceberg. When these guys were buying, these guys were selling. If there's more buyers, we can absorb the sellers and continue on our merry way. If these buyers get absorbed by the sellers instead, and there's no more buying above here, they exhaust and you get the counter rotation. That's kind of what happens. Now, here's your sellers. These guys are trapped, maybe, and you don't know. The buyers take it on again. What makes this potentially go higher? We got to get above where the sellers, the passive side, overwhelm these guys. So that's what I know. These guys are short. These guys are stuck. Here's my buyers. It's like a shootout right here. The buyers try again. Notice where they don't get over. Now, you don't know when it's happening. You're cheering for the home team. That's what I was doing. I was going for this. And if I could get through there, yesterday's high. What's above yesterday's high? Stops. See? So that's a viable long for me. Here's my buyer. Charge the light brigade, right? No, not so much. Sellers take over again. So let's look at this in micro. This is why I don't use candlesticks. What am I going to do with those? The idea of an order flow tool is to have an edge. Most retail traders are using lagging indicators or structures. They're very late to the party. Right here, I know what happens. Exhaustion. These guys are stuck. These guys are stuck. Sellers come in. Right here, so you got these sellers, this guy. If these sellers in this leg don't get squeezed out, then it's that. You can see this. Now, I come down here. This is a location for me in the Trader Lab for a long. There's my buyer. Here's my selling leg. So let's look. Buyers are here. I see nothing down here. Break high. Sellers are here. My buyers are here. My seller is here. Sellers are here. This sets up a long here to here. That's it. And I always scale. I give it a couple ticks. And then I'm looking for this. I'm just showing you how the trade works. See, there it is. So I'm scaled and I'm going, all right, let's go. We come down here. We tick this thing. There's your sellers. Notice how they get trapped. It's the opposite of this. The buyers are stuck here, the sellers are here. I know I'm taking you into some minutia. And where am I trying to go? Oh, they're stuck. Back here. Out the top. Nah, not so much. Now, let's talk about a short. I didn't take a short. I didn't have a way into it, so I didn't take the short. But what do I know? Statistically, and I hope I answered your questions about candles. I personally, and I can't say what's right for you. Been there, done that. I would not spend my time there. Me. I'm not saying, and it's not. I'm not saying you can't use tools, but it's kind of where you push your energy. Come to Trader Lab. I think you might find, and you can discuss that with other traders who use candles. Everything has a place. But if you're going to use an order flow tool, the advantage of the order flow tool is to be here, to recognize what's happening. By the time your candle forms, you may have a wick and a body or something, but what about this? Do we ignore that? You see? Anyway, I hope that answers your question. So, market breaks down. This right here is my next location to observe. I hit it. I have absorption here. Absorption, liquidity, buying iceberg, 496 sell stops come out. This is the beauty of the stop and iceberg detector. My market pulse is at an extreme on the outside. I took a long here, right here, trying to do what's called mean reversion to come back here, right here. So I took this, and not so much. Here's the mid. Now I anticipate mid sellers, but I was looking for VWAP in this, and you'll see not so much. I took a stop. Okay, all right. Don't mind telling you that. I don't care. Do I care? Well, to a point, but not too much. So now I see I have another leg down. This failed. I'm under the overnight volume point of control, which is a long for me. I break below it. I test it. Now, right here, where these buyers failed, notice the structure here, in alignment with this, is a potential short. I did not take it. I just was, because I'm still mentally in this thing. I'm still thinking longs. So I see a short, and that says stand aside, because I have more targets. I have this, remember the statistics, and I have this value, this here. So this is my next area. So I'm just going, you missed that one. That's what I say to myself. And I go, okay, why do I want to get long? Trend is up. We had the early long, which was me. We had me over here. Thanks for playing. Broker sending me a gift basket. And no short, which is a short, but I didn't take it because I want to get long. If I get short here, which is fine, where am I going? Here. So here, this area to here to here. I looked at it and it just wasn't not what I wanted to do, because what I'm trying to do? I'm trying to get long. Now, here's something that's interesting. You can trade long, you can trade short, you can be short when you're trying to get long, or you can see shorts stand aside to get long. So my thing is, I just try to keep with the context. If the short-term context changes, my choices are I can switch, take a short, and I don't. But the thing I have that was problematic for me was this, because there's about a 70% probability I get here. And if this is too low, I can reverse right here. So I didn't see the range, So I just said, okay, that's fine. So anyway, I didn't take the short. Short was okay, not my thing. I come down here. So I have, this is my next probability. Let me go back to the statistics. I hope you find this useful. How do you put pieces together? How do you think? Well, statistics are quite important because we're kind of floating in space. How do the casinos succeed? Statistics. But what else do we know? Everything is random. So I can work with statistics, but I don't know. What do I know? I don't know. By the way, write this down. We don't know. It's not remember, this is not a business of predicting. This is a business of maybe. So maybe we'll get here. Maybe we'll stop here. Maybe we'll stop here. Maybe we'll stop there. Or maybe here. Or maybe we fall out the bottom and fool everybody. Here. But what do I see? Let's look. This comes into the book. I'm looking at that and I'm going, that's interesting. You ever go, let me put something on here. I'm just going to show you something. This is something I like. Where is it here? Liquidity marker. Give it a second to come in. So I'm looking for a long, and I'm going, high probability here, high probability there. This, interesting. 339 come into the book here. It's like somebody drops this thing in here. Why does this come in here? Well, do they want to buy, or are they looking to exert pressure or influence? That's how I look at this. I don't know what's going to happen here. I have no idea. But one thing you'll observe with order flow is we don't know ever what the intention is or why this came into the book. Do you think maybe it's possible that these icebergs, which are different players, different time frame, that the longs in here want the market to go up, and that somebody more sophisticated than us might be putting some influence in the market? So let's take a look. So I'm looking here. Here goes right through it. So right here, I am stalking my long. Let me show how this works, maybe. And this is just one way to do this. There's no right way. So look over here. Buyers got stuck. Sellers took over. I'm taking you now into the micro. My sellers are still in control. High volume, which is right there, says too high. Micro structure. Sellers in control. Watch. I get a buyer there. How we doing over here? Not so much. Volume is there. This is your little store. This is the little shopping, the thing down the block. Tuna. Too high. I'm not paying that. Sellers here. Only a buyer there. Seller. Where's my buyer? Sellers. In control. Last buyer is here. Buyers take a shot here. We got sellers in this leg. Last buyer took his shot there. Stuck. Now, I don't know, by the way, is that a buyer or is it just somebody covering, right? So I have to make assumptions. I don't know anything. So I go, I don't know. But what I know is the market's going down. And I know this is here. So here's my sellers. These guys think of it like an offensive or a counterattack. These guys are in control. There they are. Here comes a buyer. Now, it might only be stops. You see, it's 17 buy stops. It might just be somebody who's micro trailing. I have no idea. Do you? I don't know. Last buyer is here. Volume is here. Seller is here. Pullback to the volume. Microstructure there. These little nodes are high volume. This is a consolidation in a microstructure. That's all this is. High, low. Oh, it's on sale. I'm not paying that. Yeah, you're crazy. Here, let me get this off of here now so I'll clean it up for you. So you can see the structure. Too high, too low. Buyer, nada. Too high. Oh, I'm not paying that. Yeah, but it's on sale. You got to be kidding me. No, I'm not. Really? High volume. Break. Sellers are in control. Buyers take a shot. Where do they come? Back to the high volume, and it's too high. Trapped. South. Buyers, no bueno. South. Buyers, right here, I'm looking. Let's look a little further. Now, let's get more into the holistic experience. I get my buyers here. So I don't know. I'm going, how interesting. This is in the book, remember. I'm looking here. This is the NQ, correlation tracker. I'm looking at it. It doesn't, the market pulses in a oversold, if you will. You want to think of it that way, condition. And I'm looking. I'm going, because I want to get long. What am I going to do? So I got my buyers here. I got my buyers there. I got my sellers here. You could see them. And I got a seller here. So this right here is where my sellers are. Here's my buyers. So let's look. Sellers, buyers trapped here. Remember, this is the last place they got run over. Then here, they're run over. Sellers are in this leg. Buyers are here. Sellers take a shot. Right here, I'm looking at this. They get pushed out. I come back. There's my sellers. Now I'm down here. I'm looking at it and I'm going, okay, what's happening here? Sellers are in control. Buyers are here. I mean, now I'm taking minutia. NQ is doing the Acapulco cliff dive. Let's watch. Sellers are here. Sellers are here. Buyers here. I'm thinking they're toast. Why wouldn't I think anything different? We didn't get above this. Change. Sellers are here. Sellers are here. Buyers are here. Buyers are here. Break above. Buyers. Long. VPOC migration. This becomes a problem. And my teeth start chattering right here. And here's why. If the high volume now is here, it is saying potentially underline what's above us is too high. Right here, we have to cross over it. If we can't get over this, we can push off it and go lower. And it's only one trade, but still, you got to root for the home team. But notice the change in behavior. Buyers, right? See the change? Okay. So long. So for me, I'm long. I posted this in the Trader Lab. Now, right here, the teeth chatter. Let me show you why. Sellers are here. Buyers are here. Right here, this buy bubble you see is delta. I have 232 selling, iceberg go off. Stomach goes into a knot. They are absorbed. So you have a buyer, selling iceberg. This is the absorption detector. It is basically saying buyers got absorbed, and there's why. So right here, this puts my long in jeopardy. And right here, if I push off this way, trade's going to be over. I am scaled. So, the worst that's going to happen to me is I'll scratch the trade. And the stop is under here right now. Notice the buying here. I saw this. I got pretty, I was going, oh, this is nice. 447 buy stops come out and a stop sweep. Okay. And I pull back here. And I'm thinking, right when I see this and I see the selling below it, I think, oh, I'm stuck. Now, I have to say something to you. When I say things like, oh, I'm stuck, where's the voice coming from? It's that, I always say Jekyll and Hyde. Hyde is that wiring I refer to, that emotional, instinctual wiring that's there to protect us. Whether it's a saber-toothed tiger or a loss in the market, it's about avoiding pain, whether it's a saber-toothed tiger chomping on you or whether it's a stop or, any of this. So I think, oh, this trade's toast when I see this. But here's the but. But what's my trade plan tell me? That's not based on emotions. It's based on facts. It says hold. Why? Where's the stops? Mid, VWAP. And if I can clear this, then we're going to squeeze. And then this might be too low. Let's look at the order flow. Remember, buyers came in here. Sellers took a shot here. They got hosed. The buyers took over here. Sellers took a shot here. Stomach went into a knot. We rotated. We blasted here. Took out the stops. Thought we were going to the moon. Exhausted. Swept the book. Pulled back. Thinking the world's ending. Bounce here. Sellers are stuck here. Right there. Stop can be under here or wherever. It's up to you. Me, under here. Pull back. Expecting, underline, which means clueless. Going to get taken out. Buyer comes in here. Seller's in here. Seller here. Stuffed. So, stuffed. Oh my God. Now long. Now where? Posted this in the Trader Lab. To here. Target. You guys in the Trader Lab, you remember this trade, don't you? Are you guys tracking? This is minutia. Peter, whatever you use that works, that's all great. I'm just getting my thought and yours. They're all correct. There's no wrong in trading. We had a magic 8-ball on the trade desk, years ago, and that was a lot of fun because we would ask that, and it was as right and wrong as everybody else. It doesn't matter. Actually, what it would say is ask again. So it really didn't give you much as far as a good answer. I use Renko bars, and it's not really. I just use them to kind of see the higher time frame, because this is more like minutia. Because I operate in this for execution and trade management, but I also do look at a higher time frame, and you could use anything you want. I found Renkos were much better, but you could use whatever works. When I started out, we didn't have candles, so I started with bar charts. It's all the same. It really doesn't matter as long as it speaks to you. So there's no right or wrong in trading. The right or wrong is edge. That's the only measurement you have. What you do to get it doesn't matter. So let's go back to what we know. This is too high. Remember, this is saying, I'm not paying that. This becomes retail. We auction this thing. It turns out it's too low. So what was too high? Let's go back to the store. Is this really too high? That's why it's a target. So my long, scale, get risk neutral, to here, and then put a helmet on. That is my trade. And then I'm going for, remember the early morning statistic, overnight high. But once I'm coming up here, I'm no longer going for the overnight high. I'm going for the stops above yesterday's high. And I posted this in Trader Lab. We have another target. This. And these are all posted, and they're all on the price map before the fact. This is called the micro composite low volume node. It's an outside edge of consolidation in a higher time frame. So this is the target. And there's more. We have open targets we haven't gotten to yet. This 39.40 is an area, and 50. These are targets. They're the same targets from yesterday. It just doesn't matter. It's like they're auction-based targets, and the fact we may get there, we may never get there, or we may get there next week, next month, or not at all. That's not anything more than targets. And then it's a matter of what happens. So let's go on. So next scale. Okay, now watch. VPOC migration. This is another long in the Trader Lab. Now, for me, I'm already long, VPOC migration. This is saying now, too low. I got to label it. Now, this is process, right, guys? Remember, I trade. It's not mechanical. What it is auction based. I don't use indicators. Now, I do share this market pulse with you because it's a Bookmap tool, but the primary chassis that I trade on and auction-based or volume profile traders trade on is this, because this tells us what's going on. It's not an indicator. It's just a measurement of price and volume. And if you think of this like a shopping experience, and that's kind of how I ended up kind of relating to it, was what's going on? What creates this? Why? Do you ever ask yourself why? Well, this is why. The market is trying to figure out what's too high, what's too low, and it does it in all fractals or time frames. I don't use the clock, so I'm not a time-based trader. I'm more of a rotational guy because the rotations are the auction. If it takes 5 minutes to do this or 3 hours, it doesn't change anything. We could stay in something like this for 4 hours. Well, if that's the case, I have a trade plan for it, and that's what it is. If it takes 30 seconds and I'm in a little fractal like this, the behavior is the same. It's just compressed. But what creates this is the same behavior. So whether it's this kind of thing or this little thing, they're the same. I call them Russian dolls. Russian doll, you got the big one, and let's call that the higher time frame. And then as you go down in Russian doll, they're exactly the same. but they're smaller. That's trading, in my opinion. And the term I use for that is fractals. And the reason it's not time-based is because the behavior of the participants is not fixed to a clock. It is fixed to the auction, which is whatever the time it takes to complete an auction in a location, like this little thing here, and then move away. Where's the clock on this? This can happen in 5 seconds or 50 minutes. I hope that makes sense. So I follow the yellow brick road. Speaking of the yellow brick, VPOC migration. We're now back here. We've rejected this. This is another long in the Trader Lab. Why might I take an ad here? And this is not a recommendation. Let me explain. If I have a statistic here, and I know that, and I do know, there's not much I know. I know yesterday's high has stops because everybody puts their stops at outside edges. So I know there's some fuel up here. What does the market tend to do? It tends to trade into the fuel. Then either it exhausts and that's the end of it, or we go on to next targets. I don't know. So right here, add, scale, hold into this. Watch. Now watch. Now I see this in the book. Now I manage my trades. I trail, right? So I don't know. And often I get taken out and the market continues without me. It's just the way it is. I have no clue. Let's look at order flow. Now, how do you know that this is not going to pull? Or we buyers take it out? You see, you can't know. So my job is not to know. It's to follow a plan. Let's look down here. Sellers, buyers above, trapped. Buyers, buyers, buyers. Sellers take a shot here. Uh-oh, but where's my buyers? Here. Sellers are stuck here. Buyers here. Seller takes a shot here. It's only 2 sell stops, and who knows, somebody getting short. I get above here, trapped, stop here, going to the moon. And that's kind of what I think. Yeah, we're going to the moon because I have no clue. Here, I have my buyers. Watch. I can see my sellers here. And I'm going, okay, I need to get above these guys. I see my sellers. I see my sellers. Notice a change in behavior. Right here, I'm looking for a buyer to show up. I don't see one. So this potentially is exhaustive, and I have no clue. So I have choices. I can trail a stop here. I can trail a stop under here because there were sellers in here, but nothing. And the buyers are above. So it's up to your trade plan. I got taken out. Okay. And then I'm thinking, oh my goodness, but what do I see here? Sellers here, buyer here, something, and these guys are toast right here. Where do I come? And the sellers are in control in this leg. Now I'm still bullish. I still got, and I have something else. At 9:30 Central Time, wherever the high is at 9:30 my time is called the initial balance. It's an old thing from market profile days. And it basically the highest volume takes place the first hour of trade. And I was discussing this morning in the Trader Lab that we do a study based on what happens when volume compresses, which happens after the first hour. Now, there's 2 pieces to this. What happens actually as volume compresses? Let me first answer the thing about initial balance. Highest volumes in the first hour of RTH. If the market moves outside of the first hour and down on the floor, when we had floor traders, most of the business would be done in the first hour. We'd all go to breakfast down at Manny's on Jackson, CBOT, CME. Okay? Jackson was down from the CME. So we'd all go. So the volume would drop down. The locals would all go, needed breakfast after that. And then the volume would drop off. Most of the institutions, a lot of them do their business early, they're done because they need the liquidity to execute in. This is just fun facts to know and tell. So if the market could move outside of the first hour's range, it meant potentially, and this is just according to the theory, market profilage, that there was a higher time frame participant active, and that was called range extension. That meant possibility that things would, continue maybe. So statistically, considering the context is up, considering we're over yesterday's high, considering we're over the ETH high, considering the volume point and controls migrated back up, all those pieces suggest potentially this is going to get taken out. It has over a 90% probability, and it's actually closer to 97% probability of getting taken out, at least the first hour high or low. Considering we're north and the context is up, I'm going with this one. How about you? And past performance, not indicative of future results. It's still random. So what do I know? I want to get long. Let's look. So out of the trade, 9:30, this gets fixed, and then I want to get long. Notice what's happening. Buyers are here, sellers are here. Micro, high volume. Let's get into the minutia. Bookmap. Right here. You see that little node? This is shopping. Right here. Buyers were here. See them? Sellers took over here. We come back and now there's no way to know. Knowing is nice, doesn't exist. Sellers, so we reject that. Now you don't know till you know. Here you would know. If you can't get over these guys and this volume, there's trouble in River City. So you could punch out of the trade, or your plan says your stop's down under low of the day and you take a nap. We have traders who do that. Not my thing, because I can't sleep. I'm too, engaged. Let's look where we come back. Here. If you're not managing your trade, let's say you're out here someplace and you're in Trader Lab, and I'm in minutia, I'm just sharing auction-based structure in multiple fractals or time frames as you think about it. This is too high. Now I see my seller here. Now you might not do anything with this, but now you know that this was too high. What we don't know is, are we going to take it out or are we going to reject it? Let's look at the behavior. Look where we come. We test it. Where's my buyer? Nada. Sellers in this leg. Buyers trapped here. No clue. Come back. Where's my buyer? Right here, you could be out of the trade. Now, if you're a counter trend trader, which not in this configuration, it could be a short back to here. It's not, but I'm just saying it could be. Okay? There's my IB. Now, back here, it is now 9:20. This is now, and I don't know at the time, so you know. But what did we do? Now we have the IB high. And I'm going, time to get long again. Now, when this happened here, you have choices. You could manage the trade, get taken out, you could bail out here, or your stop is somewhere south and you're just going to ride through this and you're going to take some Dramamine and also accept that this might be the high of the day or this might be the high of the day and you're going to give it all back. Can you deal with that? Now, I'm asking you the question because I can't. Me. I'm not saying you. We have traders in Trader Lab that'll put a trade on and go to the gym. I'm not mentioning names, but if you're in Trader Lab, you know who that is. It's kind of a joke. But you know what? It works for this guy, which is really what's the beauty of trade plans, because his psychology aligns with that and his metrics. My psychology does not align with that. I'd be flipping and flopping. So for me, I manage my trade. I get out and I put it back on. So I am still trading, so you guys know, here. And let me go back to the other piece. Statistic. The initial balance high, over 95% probability. Remember, past performance not indicative of future results. So if the thing comes down, I'm going to buy it again. Where does it come? Here. VWAP, mid. Let's look. And I don't know where it's going. I'm as clueless as everybody. Believe me. When I tell you I'm clueless, I am. Why am I clueless? Because I have to be. Because I can't assume I know anything. Now this is not a Trader Lab structured trade. This is a long here, but I'm not going to really get into it. And if you want to look at it, here, I'll just show it to you. Now, this is not a structured trade. The structured trades are available if you're in YouTube. You can download those 60 PDFs of structured trades that I share, and there's no cost or obligation or any of that jazz. It's just there for you. And the library of webinars, so you can see this. This is not a structured trade. This is a behavioral trade. Let me show you. I'm going to show you anyway. I normally don't do this in the stream, but I'll give you just a little thing. The buyers are here. Sellers are here, right? Liquidity is here. Sellers take control. They are stuck. They got absorbed by this liquidity. Let's just follow this. Sellers are here. VPOC migration, new retail price. These guys are stuck right here. Buyers take over here. So these guys are under the bus right here. Buyers here, sellers take a shot here. These guys are under the bus. This guy is under the bus. These guys are under the bus. And this is retail. So, just showing you something. Sellers here. These buyers are on the hook now. Sellers here. Looks like it's the end of the world. Buyers take over. This sets up a potential intraday scalp, not my trade. I'm just showing it to you. Come up here. See, I'm just showing you. Now we have the opposite. Buyers are here, sellers take over, right? Check the micro high volume, which is that, then reversal. Just showing you the microstructure. Okay, so now let's come back to the long. Out to the mid. These longs in this leg are under the bus. Thanks for playing. Broker sends you a gift basket. Let's come back here. Market is short, mid, iceberg. Let's look. Don't know. And I have a structured trade in the Trader Lab called VWAP or mid to VPOC. That is auction based. I have a variable high volume node under here. Too low. I know it was too low. I have no idea about anything else, right? Right here, it pulls back. And I'm looking at it. I got my sellers. It just looks like, oh, this is terrible. There's my buyer. Sellers again. Mid. Iceberg. Sell stops. Combination. Order book. That's interesting. Buyers. Change. Sellers. These guys are now trapped. Potential long. Let's watch it. Watch the behavior. VWAP. Mid. So if you get long, your stop needs to be either under here where it was too low. See this? Or under here. I prefer to be a little further away, just me. So if you didn't get long here, you saw your buyers. So let's assume you didn't do anything here because you're going, what's going on? Pull back. Long. These sellers are now on the hook. There's your buyers again. All this is a long. These are longs in Trader Lab. And then why would I be thinking about that? It's 925. I have that high. I have a statistic above me that has over 95% probability, past performance, not indicative of future results. Let's watch. And it's here, the initial balance high. Whoop, get over here. So that's my next target. Scale. Or use scale to get risk neutral. It's all up to you. So now, because I have that probability, I'm holding for it and holding my breath at the same time. Now, what else do I have? This. And all this is posted in TraderLab. So that was my last trade. Now there's more. So this. And all this is posted in TraderLab. Now, for me, I get a little bit ahead of it. And here's another thing to be thinking about. You see this here? This liquidity in the book? I pointed this out. And because I look at this stuff and I'm going, oh, that's not so good. Yeah. Why? My buyers have to get over this to get to the next location. I'm outside of my IB. This could be a problem. So what am I going to do? Let's watch. And I think I pointed this out in TraderLab. I can't remember, but if you visit TraderLab chat in the community, all this stuff's posted, as we move along. So right here, going up, this comes in the book. And at the time, I mean, that's a fair amount of liquidity, okay? The buy, now right here, let's look. I call this a shootout. Now, I don't know, I make these things up. But you notice what's happening here. I get my buyers right in front of this thing, and I have a seller here. Now, we all can see this if we have an order flow tool. And lots of times, and I do this myself, I will scale in front of something like this because I'm thinking, well, this is probably an iceberg, And notice the icebergs that are selling, they sold here, So, and here's my buyer, and you'll see they are absorbed. So that's the absorption detector. I have buy stops coming out here, selling iceberg. This is the liquidity for the iceberg, and you see the absorption. This is important because right here, if this absorption stops the buyers, will counter rotate. That's why selling in front of this is not bad if you're running multiples or being aware that you might get a reaction off it. Notice we got this reaction here, and then our buyers hit it. Right here is very critical. Let's watch the behavior. Notice where it comes back. I use these, and I can't remember. I believe I posted in the TraderLab that the reaction and this is order flow. You can learn about this in TraderLab. This retracement is important. Why did we come back here? You can learn about this in the TraderLab. Come up here. And I'm still going for this thing. So this is an important area. Here's our test. Sellers are here. Sellers are here. Buyers got absorbed, broke out, tested it. It's a potential long add or something. It's all up to you. Watch. We come down. We test this. Watch it. Buyers again. High volume is up here and here. It's a trade management opportunity, or you're way out here. And for me, I'm way out now. Just me, doesn't mean anything. Here's the other piece. This is a potential long if we come back. It's called the IB continuation trade. It's a structured trade. And we're still going for this thing. So let's just see what we do. Well, that's what we do. We never get back there. And this is the end of my trade. So that was it. And then I got a stream. So that's as far as I got. Now, I haven't seen this, so now we'll go take a look. Any questions? I know I've been kind of going here. I want to show you. And by the way, here's something to notice. 2,000 selling icebergs, 800 selling icebergs. Do you see a change in the number of icebergs that are selling? So these buyers up here are being absorbed at a location. Just saying, something you can think about. Questions, guys? Thanks for your patience. If you're interested in Trader Lab, thanks for the question. There's a link in the bottom of YouTube. That'll bring you to the Bookmap Discord server. You can access the server, download, go to Trader Lab. You can download 60 PDFs of these trades that I'm referencing. They're available to everyone at no cost. 60, and there's a lot of this stuff, order flow phenomena. That's an actual trade I had on. I was short, and as soon as I saw the change in the behavior of the book, I exited. Market exploded up. I think this was, I don't remember. This is a long time ago. But a lot of these trades were actual trades. I just took screenshots. Others, when Bookmap asked me if I, would you share this with our traders? So, okay, this is not what I do, This isn't a live trade, and you could see the target was here, see the reaction, targeted was here. This is kind of what Trader Lab is built on. Order flow, auction market theory. Why get long here? Why get out there? It's okay, That's 10-point trade. That's what we're doing in Trader Lab. And by the way, you could take losses as well. We take stops with the best of them. That's our job. Protect our account. So all this is available, and it's no cost, And some of this is experimentation. I work with developers at Bookmap at times, and help create things, tools, So there's a lot of stuff. This is from 2020, 2021. Anyway, you can access that, plus a library of webinars. It's available to all of you at no cost. And there's a link in the bottom of the Bookmap Discord Trader Lab chat. So let's continue along. VPOC migration. Now, what this is suggesting is everything below is too low. And this is our outside edge. Now, if we can get through here, let me give you our next targets. Remember, top of the stream, I go over all the higher time frame. This is really an area that had reactions and was important previously. The auction tends to come back and check prices. Remember, shopping. If you understand shopping, and if you're a shopper, that's what trading is. It's shopping by the participants and discovery of value. What's too high, what's too low, that creates your rotations. And this was an area that we left last time we were here. The shoppers said, I'm not paying that. You got to be crazy. And they left the store. And they went lower to find what's too low. And now the nature of the market is to tend to come back and check. This was an outside edge of an intermediate time frame. Think big consolidation. In other words, this is a consolidation, right? Right here. And I'm only doing this in the intraday developing time frame. That low volume out there is an outside edge, and down here is an outside edge, and the market will consolidate. In the intermediate time frame, we get the same, remember, Russian dolls, right? Matryoshka dolls. As you go up in time frame, you're going up in Matryoshka doll. This is a low volume node, same as that, different time frame, and a higher time frame. So we can come outside to this low volume area. I should have said low volume area because the volume tapered off because it was too high, and then we rotated. This was an area that was too high last time we're up here in a higher time frame, and we rotated. Now, if we push through here, then we can come back here, which was a high volume area, and here, another high volume area in a lower time frame or RTH. So I know that's confusing, but I can't give you a full understanding of market mechanics and auction market theory in an hour and a half. But the library of webinars that's available to all of you at no cost in the Bookmap Discord Trader Lab, plus the community of traders, all different approaches, everything. There's no right or wrong to trade. If somebody asks me what's the right way to trade, I have a very simple answer. Can you measure it? Is it consistent? And do you have an edge? If you can't measure it because of random inputs, it's like making a stew. Well, sometimes I do this, sometimes this does that, sometimes these come together, sometimes it doesn't. Sometimes I'm looking at a moving average, sometimes I'm looking at a stochastic or a MACD, other times an RSI, or maybe a Keltner channel or a Fibonacci. Sometimes it's an Elliott wave. The sometimes doesn't work. It's got to be all the time, period. End of story. If it's not all the time for specific trade configurations, then you are the gambler. The house, the casinos, there is no sometime. It's the same process all the time because that's the only way you can measure it. And gamblers win. That's our problem. We win with a potentially failing business plan. Gamblers walk out with the cash. The house gladly pays the gamblers because it's overhead and costs of production. Last few days I mentioned I was driving cross country on Monday. I didn't stream. And there were these huge billboards. Mercedes-Benz, jackpots, $300,000 a day. Just show up. We'll give you $500 in chips. Just walk in the door. Why do they do that? Because over time they extract the dollars from the gamblers. Why? They only play games that are anchored with a vetted statistical edge. What are you doing? Are you doing that? Or are you a gambler? The problem with being a gambler is you win. And because you win, you think it's a matter of tuning and tweaking. That's logical. But if you're using variable inputs, you have an inconsistent process. You can't measure it and you're having a great time. But that's not the business of trading. If you're interested in the business of trading, that's what Trader Lab is all about. And if you think there's a quick fix, it doesn't exist. If you want to compete against other traders, and they're all over the planet doing the same thing, you got to do something different. If over 90% of retail traders do not sustain a career in this business, why? Because they're mostly doing the same thing. They're mostly going out there on YouTube, Instagram, or whatever it is, and all these gurus have the one indicator, the one thing. We can't be naive. We all want that. A lot of these guys are just marketing machines. Come here, pay me a subscription. You'll have a great time. Learn the trade. Make $1 bazillion in 12 minutes. It doesn't work that way. And you, in your heart, you probably know it doesn't work that way. But you'll pay anything to be successful. I know I would have when I started out. And we didn't have what you guys have today. You are overloaded with information. I don't know how you ever sort it out and without going broke first. Running out of time, running out of resources. That's why the Trader Lab exists. I called it baptism by lava. It was terrible because I kept waking up with something I called Trader Groundhog Day. I'd get something, I'd look back and I'd say, this works really good. Make a few tweaks, and then I'd trade it. And it would work. And then it wouldn't. Then I said, I know what it is. I need optimization. I built trading systems. And there was no day trading early on. It was trend following and swing trading. So that's what I did. And these things would, you'd curve fit them. You'd take data samples and all this. And I talk about this in my webinars. And if you're interested in getting an understanding of market mechanics and the process and the business, use the link in the bottom of YouTube. Visit Trader Lab. It's no cost. Download the resources. Visit the community. It's terrific community. It's serious. There's no nonsense. It's not tolerated. We're all here for the same reason, to get better. And whether you're a developing trader and you're not already profitable, or you are a profitable trader looking to tune, tweak, and develop your skills further, you may be able to get some benefit from Trader Lab and all the additional no-cost education that's available at the Bookmap server in Discord. Stocks, options, large cap, small cap stocks, options, order flow with a high tier, best-in-class tool like Bookmap, swing trading, market maker behavior options, algorithmic behavior, and a lot more. And Trader Lab, of course. you will find, and I suggest if you come to Trader Lab using that link in the bottom of YouTube, you watch the primer webinar first. It's got over 28,000 views, so I think there's something in there that might be useful, but it gives you a high level overview of what this is about and why. And the other part of it is why you need to understand the business of trading is not what most of us fantasize it is. Any final questions? I got a couple of minutes. And remember, what are our open trade potential targets? Not a recommendation ever. This and this. Not a recommendation. You could write that down. 40 and 50-ish are our targets. The market, and remember, the market may or may not ever get there. But what do we know? Volume point of control is here. This is retail. Now here's what can happen. We can rotate. This is called consolidation. The structure is the following. Up, we can agree, right? And now what? Rotation. What is the plan? If, underline, we come outside, oh, it's on sale. Retail. What might that set up? A specific trade plan called mean reversion, which is outside in trading. Oh, it's on sale. Retail. Oh, it's too high. I'm not paying that. Retail. Rotation. So how do you trade this? In the Trader Lab, these are not recommendations. You're hanging out long, filing your nails, working on your crochet because you're in a higher time frame, or you are going outside in. Outside in. Outside in. Hope you're getting something out of this. Thumb up in YouTube if you got something from this today. Appreciate you visiting. Final questions. How about a YouTube? How about a couple thumbs up? If you're late joining, this is the PDFs you can download. These are the actual trades, so you can follow along and anticipate them. You know, the thing about trading is you're not making up as you go. You wait. It's like, where's my trade? I have a little saying, I got a couple little sayings. You got to anticipate to participate. How do you do that? You wait for your trade. If your trade doesn't show up, you got nada. By the way, this is a long entry that I took. My stop was right there. Location. Scale. And then the target is up here. Buy a day. This is a 15, 20 point trade. This is Trader Lab. Now, what range are you going to get? It's not up to you. It's up to the other participants in your trade plan. Thanks for visiting Trader Lab, everybody. I really appreciate you stopping by today. Click the link in the bottom of YouTube if you're interested in these resources. The Trader Lab is a community second to none, in my opinion. It's not a trade calling room. If you're interested in establishing a potential business in trading, a career path, that's what the Trader Lab is. And again, if you're not willing to put the work in, then don't bother. And if you're not willing to suffer along with a learning curve, you got to be realistic. If you want to be a top competitor, where 90% of retail traders fail, based on statistics we're all aware of, you have to be willing to do what others aren't willing to do. And that is roll your sleeves up, ask questions, persevere, and step by step, develop a business. And I welcome you to do that if that's your intent. If your intent is just to click the mouse and kind of get an adrenaline fix, then this isn't for you. At least Trader Lab isn't, and there's a lot of folks out there to help you do that. Trader Lab's for serious traders looking to build a business. If you want to know about Trader Lab, click the link in the bottom of YouTube. There's no cost to participate. Ask in there what other traders are doing. Ask them what their journey is like, what the impact of Trader Lab has been on them. And like everything, your mileage may vary. Trading is not for everybody. Thumb up on the way out, and thanks again for visiting Trader Lab. And be sure to access the Bookmap Discord server for a lot of additional education. I think you'll find it useful. Thanks again, guys. Thanks for visiting. See you tomorrow.